The BRR Property Strategy in the UK, a comprehensive guide. 1. Introduction. The buy, refurbish, and refinance BRR strategy is an approach in property investment that enables investors to capitalize on undervalued properties. By refurbishing these properties, they can increase their value and rental yield, resulting in a profitable and sustainable investment model. 2. Benefits of the BRR strategy. Cash efficiency. The BRR strategy allows for the recycling of initial capital, enabling the acquisition of multiple properties over time without constantly introducing new funds. Capital growth. Purchasing properties in need of refurbishment often means buying below market value. The subsequent renovation can lead to significant asset appreciation. Increased rental yields. A renovated property is generally more attractive to potential tenants, leading to higher rents and reduced vacancies. Tax efficiency. In the UK, refurbishment costs can be offset against rental income, potentially leading to tax savings. 3. Step-by-step process. A. Buy. Research. Utilize platforms like Rightmove and Zoopla to gain insights into property prices and potential rental incomes. Connecting with local estate agents can also provide valuable information. Due diligence. Investigate the local area, amenities, schools, transportation links, and future developments. Such factors can influence property values and demand. Financing. Consider financial instruments like bridging loans for quick property acquisitions. B. Refurbish. Planning. Engage with professionals like architects or builders for advice on refurbishment scope and any required permissions. Budgeting. Obtain multiple quotes for the intended works and ensure a contingency budget is in place. Works. Monitor the refurbishment progress with regular check-ins to ensure adherence to quality and timelines. Revaluation. Post-refurbishment, the property should be revalued. Consider staging for this evaluation to maximize perceived value. Century refinance. Mortgage. Transition to a longer-term mortgage product post-refurbishment. Collaborate with a mortgage broker familiar with the BRR strategy to find the best deal. Extracting cash. The refinance process should ideally allow the extraction of most of the initial investment, ready for the next BRR project. 4. Risks and mitigations. A. Over-budgeting. Risk. Costs can exceed initial estimates due to various unforeseen challenges. Mitigation. Use experienced contractors and maintain a contingency fund. B. Overestimating end value. Risk. The post-refurbishment value may not meet initial estimates. Mitigation. Be conservative in projections and seek out comparable property values from estate agents. Century refinancing issues. Risk. Challenges in securing favorable refinancing terms. Mitigation. Maintain relationships with knowledgeable mortgage brokers. D. Market changes. Risk. Economic downturns or policy changes can affect property values and demand. Mitigation. Keep a financial buffer and be flexible in strategy, considering longer-term holds if necessary. 5. Conclusion. The BRR strategy in the UK offers a structured approach to property investment that can yield significant rewards. It combines capital growth, enhanced cash flow, and efficient capital use. However, its success requires thorough research, careful planning, and the agility to adapt to changing circumstances.